Good afternoon. This is Clark Neighbors with the market commentary for the week ending June 10th, 2016. Another very dramatic, volatile week in the grain market. For the week, corn is up 12 cents, beans up 75 cents, wheat basically unchanged. Now, looking at this afternoon's commitment to traders report, we saw a big increase in the fund long position in corn. Went up 77,000 contracts to 207,000 contracts. Beans virtually stayed unchanged, up 1,000 contracts at 210,000 contracts, and the funds are still short wheat in the range of 53,000 contracts. Did alleviate that by 7,000 contracts. Getting back to the corn at 207,000 contracts, that's the highest funds have been on corn since last summer. At the peak of last summer's market, they were long about 250,000 contracts. Supply and demand report out today for June, much anticipated based on the thought of smaller carryouts due to increase in exports, and that's basically what happened. We did see an increase in exports in both corn and beans, and also an increase in the crush of soybeans. So the carryout on corn for the 15-16 crop is now 1.7 billion bushels. That's versus 1.8 a month ago. For the new crop, 2 billion bushel versus 2.15 in the May report. And in the soybeans, whittled that down 30 million bushels to 370 million bushel. We continue to see the bean carryout slowly decline. That's versus 400 from a month ago. And the new crop right now stands at 260 million bushels versus the average or the guess in May at 300 million for the new crop. And again, a lot of that was just due to the increase in exports, which we have seen very good export sales on both corn and beans over the last couple of months, especially on the corn. Logistically, this is going to be a little of a challenge for the balance of the old crop. As of the export sales report yesterday morning on Thursday, there's 578 million bushels of corn yet to be shipped at current sales, yet to be shipped between now and Labor Day. That's before you add any additional sales. 196 million beans. You combine that equates to over 350 vessels that we need to load between now and the end of the year. So logistically, this is going to be a little taxing and a little interesting to watch, especially with the cash market as we get into July and August. We're already hearing talks of some commercials asking for delaying shipment on some of these products. So logistically, both rail, truck to some degree, and also the barge market is going to be key from now to the balance of the year, and see how much of this business gets moved and how much gets spilled into next year. Now, even considering the exports, which have been really good here of late, and the anticipation of maybe good exports into the new crop, when you look at today's carryouts, yes, they're smaller than they were a month ago. They're smaller than they were 2 months ago, and that helps explain to some degree the rallies we've seen in the market. But looking at spreads, both in corn and beans, when you consider where basis levels are, especially in the Western Corn Belt, and even looking at basis levels both in corn and beans from a delivery standpoint, you would almost come to the conclusion, if we are really trading the fundamentals in this market to some degree, that we are to the point where we have to ration demand the way the spreads are talking. And that is obviously not the case. Now, a month from now, if we have some crop issues and that type of thing, maybe that falls into place. But when you have an inverted new crop market on beans and very little carrying charge in corn right now, things don't quite match up that way. Again, this just goes back to show where the funds put their money, and it tends to be in the July and the Nove on the beans, and the July and the Dece and the corn. And it puts a little bit of a strange stranglehold in these spreads from a carry standpoint. I'll get off my soapbox on that, but keep in mind you get some seasonals coming up here in June, last half of June. There's a seasonal that sep corn tends to go lower. This is according to more research and their seasonal tendencies. Cattle and hogs tend to go higher in the last half of June, so kind of keep those in mind. And as we go forward, things to watch. Number one is the macros. Watch the dollar. Not only in the grains, especially the soybeans, we've seen dramatic upticks in the CRB index, which made new recent highs this week. Crude touched $51 this week, so the macros continue to be a nice play in the commodity trade as the outside investor looks for risk to add returns to their portfolios. Watch the calendar. We're getting in a critical time calendar-wise where none of us know what's going to happen because of the weather. Historically speaking, June, early July can tend to be kind of a topping action in these markets. We'll see, but depending on weather. And last but not least, and I think we all have to be somewhat impressed by the momentum of these markets that we've seen in the last 3 months. Supposedly this is the largest rally in soybeans in that March through this time frame ever. We've seen bigger rallies in beans than this, but it's more weather related, if you will. So momentum, the funds continue to be a key, obviously watching the weather. At the end of the month we have a stocks report, and that gives us an update on stocks but also planted acres, which is going to be really interesting because there shouldn't be too many prevent plant acres anywhere in the Midwest this year as a general rule. One final note, we're doing some updates on our website to add some educational profiles and some things to help with customers or potential clients to better understand the use of hedging and options. And if you have any questions or input on that, please let us know. And with that, we wish everyone a nice, warm June weekend.